Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it was Tuesday, and basically, little tough day for the Red Dog, but it is what it is. You know, you have to, play the hand that you're dealt or that you take, and figure out how to manage the cards. And today we walked in, and by this time, I don't want to say it again, but you know what China did by devaluating their yuan, if that's the way you say it, because their exports were abysmal, and that means that basically everything there is going to be cheaper, so we could buy all their goods, but it costs them a lot more to buy ours. So what does that mean? It means corporate earnings might be lowered because the last 2 quarters you've seen lots of guidance lower based on the strong dollar. So them doing that puts some fear out there that we're going to have a strong dollar for longer, especially as we were coming into raising rates land, which now everyone's saying is almost off the table. But it's August 11th, so you have to realize also, we're in the dog days of August, and the action is really good anyway. It's not historical, or not even a historical, just time period. So yesterday, markets closed strong. For me, I wound up working into 6-7 positions that all to me made sense to have on, to see if we had any continuation without thinking we would engulf the entire day before bouncing at the end of the day like we always do. So anyway, we'll look at the chart here. You look at this is the spiders, and here is your range, and the range that's been intact for almost 7 months now, with a lot of just zigzagging in the middle. And yesterday looked as if, okay, here you go. Oil could be bouncing, oil stocks diverging. XLE, we'll get to that after an XOP. So it made some sense taking home some longs, and then that happened. So what does that mean now? I guess it doesn't mean a whole heck of a lot, except for, tomorrow if we get the opposite, we'll have an up open. If we're one day up, one day down, but with no continuation. But anyway, I guess you could say that this is the channel being, or not even the channel, like the wedge. You had this upper wedge, if you remember, which we were kind of looking at in here before. If you want to just keep breaking it down directionally, you could do that day by day. This was an inner apex within the overall channel, and then it wound up breaking that, boom, and then from there you had that Friday. So if you sold into here or got short, you had about 30 handles to make from the short side. So now it seems as if you still have your low, a higher low, higher low. Today we held a little bit higher, and you still have your wall of resistance, and we'll see what's next. So I did not come in long the spiders, just showing you that chart. I did come in long a few stocks, right? We talked about the bounce back to the 200-day in Apple, and a lot of guys wanted to short the 200-day. So in my head, I was like, either we're going to get a little bit above it, to squeeze everyone, or we're not going to make it there. Unfortunately, we had a good trade leading into it, and then had some overnight, and then right away, overnight, with China down, and they're thinking iPhone sales are going to be lower because China demand, et cetera, Apple was down quick. So you had a few different ways to approach it. For me, I like to take the first 5 to 15-minute low. Usually you bounce off that. The market tries to figure out what's next. Some stocks go green, some don't. And then when you break that 5 to 15 to 30-minute low, I'm like, you know what, I'm out. I have no idea where it's going to go. I was wrong. I thought maybe we'd continue overnight and see some follow through, but we didn't, so I get out of the way. And an Apple saved me a lot of money. Apple, look, before this happened, you had your nice Red Dog reversal trade right there. Remember that little 112.25, and then we broke this minor pivot to the upside. And I was kind of thinking that maybe it tries to come up and test this zone, especially the way it closed. Look how strong it closed the prior session. So it made some sense to be long some. Okay, some. And then this happened. Pow! Basically trapping all the bottom feeders right here. And I think it did it on some volume. So you go to volume, basic studies, go to volume, and you'll see that Apple did go down on some decent sized volume today. So let's take that back out. So the question is, how do you handle that trade? Do you buy the whole, do you buy the whole entire way down and have an opinion and say, well, this is Apple, it's going to go up eventually. I just hold it, I don't trade it. But if you bought it here or there, you had some quick decisions to make. One level that was important was that 116.50 area that it that it broke above. It should never have pulled in below this if it was going to be any good. And if you look at the 5-minute, it was definitely quick, and not for the, you know, but you had a little bit of time. Okay, this is me giving it time. I actually bought a little bit more overnight, thinking it was in the game, that here was support. This is what I showed on the morning call, that if it's going to be any good, it could hold somewhere around there. Bought a little bit more right in here. Was watching, you know, some other things go green. You know, Netflix went green, Facebook went green, Fitbit went green. A lot of the strong stocks went green. Amazon went green. And then on this move, broke the low, I got out. I'm like, I'm done. Okay, the hole's here. I took out the low. I have no idea where it's going to go. I sold like 117s and change, sold a little strength, sold some here, and I was done. And said, okay, that was unfortunate the way it happened. And then, you know, just the rest of the day took place where I didn't even trade it once until I shorted a little bit towards the close for a trade on this little bounce back. But this could have been your salvage. When I say, you know what, buy a little bit, you know, try and trade out of it or salvage, there's your salvage on Apple. So that's that. Now the question is, you know, where does it go from here? Let's go back to the daily one more time. You know, definitely you take this name out of the chart, and all you look like it looks like it did right now is retest this broken area, flagging below prior support. You know, there are two levels of support here, and could continue to the downside with your next spot a little bit closer to 105. And if that happens, probably the market gets a little weaker. If you look at, you know, the trend from, you know, this earnings right here, it's already broken below that. You know, you look at maybe the trend from here, you know, it broke that there. So it's, you know, it's on the right side of some of these things. So it's you know, you got to be careful. Obviously, you go way, way back. You've been in it for a long time. Let's see what that trend is. This trend, if you want to start it from here, comes up and, yeah, probably, you know, this could happen, especially the longer it stays below the 200 days. So try and just be aware of things that could happen, okay? Another stock that I came in today long was GPRO. It was trading well, looked like it was going to break out yesterday, was in it, added to it, traded it, didn't close great, took some home to figure out if it could try again today, and that opened lower too. Okay, so if you look at the chart of Fitbit, wait, don't show the chart yet, Freddie, don't show it. Okay, got to set it up. Okay, I'm sorry, let's do GPRO first. You know, this was, hold on. This is what GPRO looked like. You go to the chart now. This was yesterday, right? Stock was holding above the 8-day moving average, above the 21-day, trying to break out. It's been acting better since earnings, so this was another stock that I took home. Why not? Market closed strong yesterday. This one looked like it was breaking out, had more room, okay? And then, all of a sudden, you know, it opened lower, and I said in my head, you know, I'm going to use, you know, it shouldn't break really this area if it's going to, you know, want to break out at some point. So that was in my head, and then I did the same thing, the 15-30-minute rule, because, you know, you go to the 5-minute, and you'll see, you know, before we go into anything else, here was your first wide range bar down, which you couldn't really sell it, and I didn't sell it, but then this was your line in the sand, right here, 63. 63, okay, it's 10 o'clock. Market's trying to rally, something's going green. This tried a few times, it couldn't. So in my head, I said, if this breaks 63, I'm out, right? That's the pivot. Down, sideways. Some people might even say, I'm going to short this guy with a false breakout. You know, it's got a lot of room. So that was my out at 63-ish. That's when I left the VTF, and I also tweeted it to my Redler All Access when I was getting out of things to help guide them too if they were still in it. And then that happened. Could have saved yourself a lot of money. Look at that. Could have got out at 63, okay, or 62 instead of waiting. And look where it wound up closing. And now look at this. This is what they do to the stock. The stock just engulfed this entire range. So now this is in the penalty box. So many stocks are getting in the penalty box. And this one now changed this entire complexion here. So that will not be a focus. It hasn't been a focus of mine really for a while, but you know, around here I was thinking maybe we get a juicy trade if the market's going to be okay. And then that happened. So, you know, those were two names that I had to, you know, trade around and figure out if they could go green, what they could do, and, you know, and can I get better prices and make more money, or they're not going to work the way I thought they were and get out of the way. You know, and then right now you have like your little go-to list of names that are acting better, okay, better than most other things out there. You know, you have, first of all, you know, let's see what Google did today. You know, Google, gapped up, obviously didn't close at your highs, and now I guess you got to trade versus gap. This was a mess. I know a lot of people were trying to be long it, and all of a sudden, you know, you had to just be in it versus maybe that spot. And anyway, you know, there was not much money to be made after the gap open. Obviously, the open, I think, was $6.99, so it closed $9 below the open, but it's still up big on the day, and that's what it'll be reported. But how did it trade? It didn't trade so well. But anyway, stronger name. Amazon actually was easier as a trader, or a better trade. You know, it's still holding, it's still tight, but you know, guys on the VTF, like, what could go green today in a sea of red early? And we're like, probably Amazon, and Amazon looks different, okay, than the other names today. Amazon actually, you know, opened into support, and look how fast it filled its gap. So if you were on top of this thing, Amazon's kind of a leader, maybe some money goes there. That was your quick trade, 522 to 526, $4. And then let's see, tried to hold in here, and then what did it do? Came right back down, and then became a choppy mess before coming up at the end of the day. But anyway, you know, the opening trade was the nicest one, and then I guess if you wanted to, you know, see what was next right here when it couldn't hold this 526, that was your out. And then it brought it back to the bottom of the range that wound up holding while the spiders made new lows, and then it bounced. So that trade was actually a decent red to green, and it showed relative strength, which should be on top of your go-to list. You know, Facebook went from, you know, red to green, didn't close great, but it's still hanging in there. You know, we talked about how after this little breakout failure or attempt to break out, double top, engulfing bar is going to take some time. Well, it's still taking its time. You just got to be a little careful, because who knows how long it's going to take. Remember, you know, last quarter's earnings when it did the same thing, you know, where it tried to break out and couldn't, okay, wound up leading to a move below to test a 200-day before really repairing, and then gave you the nice trade there, and then the nice trade there. So I wouldn't be, you know, in any kind of rush, but there's some things to do in here. You know, on a day like today, it was down. You know, if you go to the beginning, look, down, you know, probably 60 cents, and within the first 15 minutes, you had your red to green trade, because it's a stronger name. So if you had it overnight, at least it gave you a way out before, you know, wedging a little bit, and then failed right there. So that was your trade there if you're fast, and that was into 10 o'clock, but it made sense. Also, FIT, which I do think is going to hang around, did the same thing. FIT, open lower, you know, traded above this little opening range pivot, and then went green and pushed. So there's your daily cash flow in your first 30 minutes when the market tried to go. Another name that's kind of stronger. You go to the daily, and, you know, it's hanging around. Still needs time, and it still could be vulnerable, but I think they want to keep some names that have some potential for growth in the game, and I guess it will get out of the danger zone if it were to ever get above that. But either way, there was an early morning trade there. MBLY, what are you doing? Still hanging in there, hanging tough. So keep this on the radar. Still holding the 21-day. So, you know, that closed well also. I'm in options. I'm going to just be in some options until I see some cleaner action. I didn't trade out of that one well. And then on the flip side, the cuter type of trades that I was looking at, you know, the oil names seemed like they were diverging. You know, I was long the XLE overnight and the XOP. Actually, both of those, you know, traded pretty well, considering. You know, XLE went green and closed green while the Dow was down 200 points. The XOP also, you know, closed green while the Dow was down 200 points, and that's also with oil, you know, at near the lows of the year. A little bit off, but pretty much near the lows in the year. And how could you have been away or out of oil? Remember this little inside range, which was that first move off the lows of the year? Well, this is when it broke, and, you know, that was closer to 1850. Now it's at 1440, so you could always save money there on top of a trend that's been in a downward spiral for almost 2 years now. You know, this is when this big support and trend broke. This was your momentum trend that broke below the 21-day, and here is your 200-day. Oil has been below the 200-day, you know, or the USO has been below the 200-day since 36. That's why we say, you know, potential swing trades are above the 21-day. Below the 200-day, not even investable. So this isn't below the 200-day. If you know, got out of your USO, because at 36, you're not hitting it down here at 1440. It's not funny. You know, this could help save you money. Not money. No, what did I say? Not funny. Could help save you money. Oh, well, anyway, and then here's XOM. You know, the behemoth with your dividend, with everything. This is when it traded below the 200-day. Traded below the 200-day back around 95, 96. So that's when you take it out of your portfolio. I'm sure traders probably sold it here, right around the 100. Not the highs, but when it broke this trend. And now it seems as if it's trying to do something. I don't know. Maybe it's trying to hold in here, but it's trying to do something. I got caught in Freeport. That's where I actually lost most of my money. Towards the end of the day, someone's like, hey, Red Dog, did you see Freeport? Look at gold strong. You know, it looks like it had an outside day before you show the chart. I was like, okay, let me take a look at Freeport. I'm like, woo, yeah, you know what? I'll buy a few thousand or whatever. And and I was like, you know, I didn't get caught here, you know, up here at 40. Look at, by the way, also look below the 200-day since 30. Since 35, FCX has been below the 200-day. What does Red Dog say? Not investable. It's been below the 8 and 21-day, even higher. Okay, so down here, I'm like, maybe there's a trade. We're allowed to do, you know, a trash for treasures trade. Like if someone's trash could be your treasure. If you had a day-and-a-half move, maybe like this or whatever, and then, you know, that happened. So it was down 11%, and that hurt. So I just got out of it. But, you know, serves me right for trying to catch a cute counter-trend trade in a broken sector. You know, but it happens. So I'm going to try and do a little less of that. Less, you know, things to do type trades, but more just compelling trades with leading stocks that have volume at the time. Or if I'm going to short something, it's got to be down on heavy volume. No more of this, you know, maybe this could work, like WYNN. WYNN, I was like, oh, maybe this could work. You know, broken stock in a tight range, didn't go down after earnings. I haven't traded this thing in a long time. You know, look at this. When this broke the 200-day, this broke the 200-day at 195. That's when you could have been out of it, and it hasn't been above since. So I thought perhaps coming into this little wedge, if the market's going to be okay, I need a few things to do. So I was long WYNN into this little spot, and then got stopped out. You know, when it went below, I think 100 and change. So, you know, and this is nothing. This is below every moving average, not breaking out. Could be a trade, but it wound up being just another little, you know, thorn in the side today. So, in a prickly market, you don't want to have the opportunity to have that many little thorns in your side. And this market has been prickly. You know, every few days or a week or so, it either feels like we're going to break out, or people are talking about it's going to crash. And that's what happens when the range is so tight. That's what happens when you're in the 6th year of a bull run that everyone's scared to buy a top, and that every 3.5 to 4% correction, people say it's the big one. That's why. So, you know, you have to be careful, because one of these times, either we're going to break the bottom end of the support range, we'll be down 250 and not close down only 180 or 200. We're going to be down 500 or 600, or one time people are going to short that resistance point, and then we're going to run for 3-4 days straight and knock the teeth out of every short, which happened a lot in the last 6 years. So until something gives, you know, don't do the prickly trades, do the compelling trades. If you're having trouble overnight, like I have had a little recently, you know, don't take positions overnight or take less. And it's August 11th. It's not like we're in prime time earnings season, or, you know, it's the fall when everyone's back and volume's a little higher, or, you know, with the fourth quarter, Christmas time when things are moving. This is the summer. It's time to enjoy, not frustrate yourself trying to, you know, play the little variations in the market. You know, so if you're going to be there and you're going to trade, just, you know, choose the ones that look the best. The A setups, A+ setups, don't do the things to do. Things to do could turn into bad things to do, and that's happening a little bit lately. So I'll see you tomorrow morning with Amelia. Hopefully you like the value that she brings, and we'll be having her on Tuesdays and Wednesdays for the morning calls. Have a good night.